It's time to speak the truth about the Fed and its minions. Far too often people play what it's become actually an absurd parlor game of parsing every word out of every Fed official's mouth. Anytime someone mentions a rate cut, it's, oh, how many, when, where? You've heard it endlessly. But on a good day, Dow jumped 307 points, S&P gained 1.11%, NASDAQ pulled at 1.24%. I need you to understand that you don't need to take these comments so seriously. When Fed officials blather all the time, making projections, pontificating, each new speech is treated as gospel. I can't take it anymore. Most of the time, these comments are full of sound and fury, signifying nothing. They just aren't that consequential, but we sure don't treat them that way. Within the last week, I've heard that we might have 2 cuts, 3 cuts, 1 cut, maybe no cuts. There's no consistency from these people and no consensus. Fortunately, there's one member of the Federal Market Committee who takes a common sense approach to waiting to see how things play out before making any big decisions. And it's the guy running the show, Fed Chief Jay Powell. Would it hurt us to just emphasize him and stop the maybe 2, maybe 3, maybe 3-card Monty drivel? Because these other officials won't keep their trap shut, we get this guessing game where everyone tries to figure out what the Fed's going to do, even though their comments really don't give us much insight at all. But here's what you need to know. Investing is not, I repeat, not a game. You simply can't afford to take your cue from this nonsense. Why? First, because Powell is all that matters. But second, when it comes to stocks, as long as the rate cuts are in front of us, they can rally. Doesn't matter when, doesn't matter how many cuts. What matters is the Fed wants to be our friend. That's the takeaway. At this point, nobody knows how many rate cuts we're going to get. That's ridiculous. And that includes Fed Chief Jay Powell, although that doesn't seem to stop any of these pop-offs. You need to understand, though, that the period before the first cut is nirvana for the stock market. This is the ideal moment where the economy's chugging along just fine.
All aboard!
And we know we're going to get some relief from the Fed eventually. But by the time they actually start cutting rates, the economy will have slowed down, and that's not good for your portfolio. This is the sweet spot, people. Somehow people seem to think that the market can't go higher without rate cuts. That is just patently false. I go so far as to say that the whole dialogue about these Fed officials is just dead wrong. The parlor game of guessing when or how many is pointless. What matters is whether they even need to cut rates at all. Case in point, this morning we got a robust employment report with some fairly decent wage inflation numbers. If you heard from a Fed governor this morning, oh, I'm sure what they would have said. I know what they said. They said, oh, maybe 1 cut, maybe 2 cut, maybe no cut. And that's all anybody would focus on. But after such an encouraging labor report, the narrative should have been something like this. Oh, good. Good for stocks. The economy's still humming. We're going into earnings season with a strong consumer. There's no need for the Fed to do anything for the moment because business is pretty darn good. If we weren't more focused on these positives, people could have gotten a jump on today's terrific rally.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.